going to talk today about making a watch list because, this is kind of a basic thing. If you want to trade stocks, you really have to know what to trade, right? Have you ever in the past, maybe, or maybe recently, have you ever had a situation where you went out on Friday night and then you ended up on that party that was so boring and there was nothing to do, hardly any people. And the only thing you could think of was, why am I here? What am I doing here? I'm wasting my time and nothing is happening. And somewhere back of your head, you know that it's Friday night and somewhere there must be a party where people have incredible amount of fun and there is huge crowds, which right now it's not really good to have crowds, obviously, but you know that it's just, you are not in the right place to be. If you have ever felt this way, then you might imagine how that is when you are trading stocks that do not move. And then at the end of the day, you see on Twitter or on Facebook, or you hear people saying, if you have contact with other traders, all these great stocks that they have been trading and you were not in it. And they've been making money and you did not catch the move. So you basically were not at the right party. And if you have never experienced that, then maybe you were with the cool kids, but it's no fun when you're trading to experience it. And I'm sure it's no fun when you are at the party on Friday night where nothing is happening. So how do you miss those stocks that are moving? Like, how can you make sure that you catch them, that you are in the right stock at the right time? So if you're already trading, then you will have probably a little bit more association with what I'm saying, because you know how it is when you are not in a stock as everyone else is. So it might give you a little bit of recognition. If you are not trading yet, then make sure you make notes, because the watch list is the one thing that you definitely want to have and start building even without trading yet. But it is definitely something you want to start building, and you can do it already now. And we'll talk about it a little bit more later. So this is my standard disclaimer. If you haven't joined my training before, then you know that everything I'm telling you is based on my experience, and this is not, by no means, this is not an advice for you to trade any particular position that I'm talking about. I hope that sharing the knowledge that I have and my experience will help you in your success as a trader. The day traders are basically, or traders in general, they're taking advantage of the price movement that is happening during the day. You have different type of trading, whether day trade or swing trade, right? But it's all about the price movement. This is where we want to, as a retail trader, that's where we want to profit from. Everyone who is trading stocks, they want this significant move, right? Because if the stock is moving just maybe, 10 cents or 20 cents, that's not something you want to watch and sit in front of the computer and waste basically your time, because that's more, for the longer term, for the investment strategy. But for the day trading strategy, the big moves is what we are looking for. And those do not happen every single day. So what we are actually looking for is the momentum. So the stocks are moving up and down, and that's normal because there are always buyers, there are always sellers. It's a marketplace. But those big moves and those very explosive moves that we can take the advantage of, these are called momentum, and not every stock is in the momentum every single day. There has to be a catalyst for that, and there are few different catalysts that can move the stock. But basically, when the stock is in the momentum, what happens and what we need to have is the interest of people. So there has to be a demand for a certain stock, because that the interest creates a price movement. You know, in general, in the market, when something is in a demand, the price rises, right? So that's the same dynamic in the market. And also, if you have a lot of people trading it, there will be a lot of volume, a lot of traded volume, which makes it easier to get in and out of the stock, because the stock is liquid. There are buyers and sellers all the time exchanging the shares. So it is very easy to sell your stock, your shares, and buy them back. What that does, if there is high volume, also it narrows down the spread, and the spread is the difference between the bid price and the ask price. So what you can buy it for and what you can sell it for, or the other way around, what you can buy it for and what you can sell it for. If there is not enough buyers and sellers, the spread is getting bigger, and then what might happen is that you buy the stock for, I don't know, let's say $20, but the spread is wide, and then already at the buying transaction, you're already losing money, because you can sell it just maybe 50 cents lower. You cannot sell it for the same price. And of course, you're hoping selling higher, but just already at the start, if the spread is big, you're losing. So we're looking for interest, meaning demand and the price movement, and the volume. Remember those two things, because this is how you will be looking and searching for the stocks. This is just like the first thing that should be at the back of your mind when you are looking at the chart, or if there's a talk about a certain company, you can just look at the chart and look at the volume and see, is there a lot of volume? And you can always find the parameters of the company and see what's the average volume traded. If you have more than average volume traded, that already indicates that there is more interest in particular company. What is the watch list? Watch list is the list of the stocks that we will be trading, right? It's like making a short list, because you can have a lot of stocks that you are watching, but it's really making that short list of those stocks that fit into your parameters and that you can trade almost immediately, or that you can watch for almost immediate move. So we'll talk about it, because a little bit more in details, because it's not just about watching stocks, it's about watching them in the right moment, right? So we want that momentum when the stock makes a big move, and sometimes they make a huge move when they are set up properly. And that's the move we want to be in. We don't want to come in, after the move. We want to make sure that we are just before, so we can actually ride that wave. How many of you already have watch list? And not necessarily the watch list that maybe fits your trading strategy, but more just the stocks that you like or that you watch. How many of you have a watch list? So if you do not have a watch list, don't worry, no panic. If you don't have a watch list, that's okay. You can start creating your watch list, even if you're not trading and don't have a trading platform. Just look every day into in the Market Watch. So there's a website, Market Watch. You can just look on online. There are different, different platforms or different websites you can look for what happened today in the market. It's even CNBC. There are plenty of shows. They're talking about always after 4 o'clock when the market closes, there is a recap on CNBC, and they will be talking and telling about the stocks that were moving. So you can just start putting those on your list and just start watching them. And then at some point when you develop your strategy and when you know what setups you're looking for, what patterns, those you might be start noticing those forming on the stocks you watch. If not, you can take them off the watch list or put them on a different tier. We'll talk about the watch list tier in a second. And the last but not least, are the stocks that are on your watch list, are they the ones you're actually looking for? So you have to know your setup and your strategy that you trade, because there is a lot of different strategies and a lot of different setups, and it's pretty difficult to spot something if you're like looking for everything or you don't know what you're looking for. Maybe if you already know, I don't know, 10 different setups, you'll be very easy for you to spot them. But if you don't know what you're looking for, you probably will not find anything. It's just with everything in life like that, right? And you can just start maybe with the industry that interests you. Recently, the computer stocks, the technology stocks were on fire, also because of the coronavirus, and of course, biotech industry because of the vaccine. So there's a lot of stocks that were moving. So you can start looking into the industry that interests you and pull the companies that maybe you recognize, just to familiarize yourself with the stocks that you know or with the companies that you know, and see how they trade. And then define the setup you're looking for and try to see if you can recognize anything in there. So how are we going to put a watch list together? So first of all, we're talking about, we are looking for the stock that is a momentum stock, right? Something that's in the momentum. And we'll be talking about breakouts today. We'll be looking at stocks that so basically for the momentum, the stocks that recently made a move and then coming out of the range, because that's what breakout is. So I thought, because of the earnings season is right now, the most relevant strategy to talk about would be breakouts, because there's a lot of stocks that are breaking out on the earnings. And then the particular pattern that we'll be looking at today is the flag breakout, but I will also show you base breakout and also flat top. I have already prepared my watch list, so I will take you through it. Feel free to copy it, to make a screenshot. We'll go through the charts and I will tell you what I'm looking at, and then we'll talk a little bit more about how to align them and how to look at the different time frames in order to make sure that you have a good entry. When you have a breakout, those stocks, basically those breakouts can be very explosive, because many times there is a catalyst, and it could be just coming out of the long resistance level, or for example, earnings report can cause a huge breakout, and sometimes they even break out over like the major resistance levels, like 52-week highs, making a new highs. And those are very powerful, because if the stock is strong enough to break through very strong resistance, like a 52-week high, that show a strength in a stock, and that stock can make a move for following not only days but even weeks. So this is what we're going to look today for possible plays for the next week. And let me see. So for those of you who don't know exactly what the flag breakout is, it's actually really very simple. it has two elements. So this is a stock that recently had the move up, so-called pole of the flag, and now it's forming now it's consolidating and it's forming a flag. And the flag is really like a flag shape consolidation. So this is a very easy thing to spot because all you need to look for is a green pole and then a flag pattern. And I'm going to show you some of them. I think you should be seeing my screen now with a Thinkorswim platform. I'm going to show you Roku because Roku is a fantastic example of flag breakouts. This is a daily chart. So remember, there is a slight difference between the daily chart and the intraday chart, how the flag will look. But the most powerful breakouts are when the multiple time frames are aligning. So if you have a flag breakout on the daily chart and then the same levels align with the flag breakout on the intraday chart, that's a very ideal situation that you would like to have. So if you look here, this is basically, you can see this as a pole. It's a trend change. So this was trending down. It was in March, so obviously because of the coronavirus, but then it had a really nice run up. So this is the run up that we would say it's pole. And then after the run up, it had a really, really nice consolidation. So you're basically connecting the tops. You can connect the bottoms. What you see here is that the flag was making higher lows, which is a very good sign. And then finally, once it broke that upper trend line of a flag, do you see that this looks like a flag? So once it broke that consolidation, it went nicely up and it made a new high, new all-time high. So this was a very powerful breakout and a lot of people were watching it. And I've been watching it forever. As you can see, it took a really long time and it was pretty, you know, it's like, it takes a while. So what I do with a stock like that, if you look at my watch list on the left side here, I have a today's watch list, which in this case will be the watch list for tomorrow. I have a tier 2, which is coiling. So that's basically, these are basically the stocks that made it move up already and now they're kind of coiling. They are not ready yet. Like for example, Lulu, you see Lulu had a beautiful move up. Then it made this beautiful flag, then broke the flag. And this is a retest. You see that it almost hit the trend line, but it didn't. It actually was so strong that it went even higher, didn't even get the low, and then made a move up. So this was a move from a few days ago, and now we have 2 candles, and it's definitely coiling. I think I would like another maybe candle or 2 to make sure that it consolidates and it does not pull back. The way to take this would be over the high. But this is because it's consolidating, it's right now on the coiling level. So preferably what we want in the flag break, and let me go back to, actually, I have Lulu also on here because I have an alert in my trading platform that will let me know if this stock will go over this price so that I can actually take it over it. And if this is your setup, because there are different ways to trade breakout, if this is your setup, you will be taking it over the high. So going back to Roku, you see this is a pretty orderly pullback. It's kind of going down, but the bottom of the flag is pretty stable. It creates this really nice support here. It dips a few times under it, but it immediately bounces back. So it shows you the strength. And once it breaks this flag. Here we have another retest here. Beautiful. So how do you trade? So this is basically now what I will be watching this for is bouncing from this, which it did last Friday, but I will be watching for holding this level here of the moving average and for the continuation to the upside. The earnings, they had earnings last week, Roku, and they had good earnings. So the market conditions right now, we cannot forget, you cannot never look at the stocks without really looking at the SPY where we are. And what you see here, that the SPY is pretty extended and it is reaching this resistance level here from the last resistance, from the last high. Actually, once it lost this level, it went all the way down. So this is quite a significant place that we are in right now with SPY. And it is pretty extended. If you look at the stochastics, it's pretty extended. So the chance that we'll be pushing up without a pullback really depends on the traders and the sentiment, also considering, the stimulus bill that, or actually the executive order that has been signed this weekend by Trump, and it does not include the check for the stimulus check. So we don't really know how this is going to be received, but we will see tomorrow very, very quickly whether we'll be having a down day or continuation, and who knows, maybe a new high, depends. Going back. So basically for the flag, we're looking for the orderly pullback. And now I'm gonna look at this day, but then let me see, it was the 31st when it actually broke. It was before the earnings. So if I go to the intraday chart, and what day was 31st? This is fine. What day was this was the breakout. So you see that actually you see this level here. This was the flag, and this, let me see. Okay, so we see it, this one, sorry. But just show you the flags on the intraday charts. These are really pretty. You see going up, and the flag pole could be one candle, but one long one, or let's say 1 to 3 candles, and that's the ideal pole that you look for. What you also don't want is, you don't want the flag to take out the whole pole, because most likely this would be a reversal. So if you look here, this is a beautiful pole, and then you had 1, 2, and 3. The reason why this is a green candle, it opened here, it went down, so it was red for a second, and then it went all the way up, and once it broke the trend line, it went up. When you are looking at the levels here, 154, you know that the trend line will be broken 154.11. If you go here 154.11, you know from a daily chart that that's the level, right? The stock opens here, pulls back a little bit, 154.11. You see what happens once this level is reached. It's actually just over the open. It just never stopped, because look at the volume. The volume was already pretty big, and a lot of people were watching it because they knew that's where the breakout is, and the stock just kept going. That's why it's so important to have your level, and not only breakout levels, but also your resistance and support levels on the daily chart, and see how they translate into the intraday, because that will give you a much better idea why something is happening here. Why is this stock pulling back here and not earlier? Or how far can this go before it pulls back? If you look at the chart here, 106. So you see the stock was going up, right? This is Friday. So the stock opened here and then it went all the way up. So this is a gap, and usually all the gaps get filled within 2-3 weeks, except for breakaway gaps that could be, for example, an earnings gap. So what I want to show you is that once the stock passed the level on the daily chart of this candle here over the highs, which is 160.39, it went all the way up in one go to almost 164. So we will go to Friday, which was this one. Let me go, 5 minutes will be a little easier to see. So look here, 160, once it breaks this level over the high from the previous day, it goes in one go to the level where it closed the gap. So when you look at this chart, when you look at the stock and you're trading it without knowing what's happening on the daily chart, you might have gone out already here, right? But this was very easy and quick trade because there was a lot of people knowing, okay, once it goes over this level, the most likely will close the gap because it wasn't really far. If it would be like $10 or $20, probably wouldn't go there in one go. And also the volume was pretty significant. And mind you, the stock was already pretty extended. So those levels are really crucial to know on the daily chart as on intraday. That's how you look at your watch list, and you switch back and forth to understand what you are looking for and what will be your cues for the intraday chart while you're trading. And those levels, you can write them down. You can make notes even on the chart, or just have alerts or draw trend lines. Do it as the most clear it is for you, because if you miss it, that's a pity, because that's the move you're watching for. I will talk about the base breakout and also flat top breakout, but I want to go to show you first the earnings for next week. This is basically what the companies that will be reporting earnings next week. If you would like to, if you would like me to share this with you, comment earnings below, and I will drop that file to you, to your inbox, so you have it. I think it's a nice visual overview, kind of easy to remember. What's starting is basically credits are going to earnings whispers. That's not something I made, so thank you them for this beautiful overview they make actually every single day. So there are some stocks that are coronavirus related, like Novavax, and I saw there are a few biotech stocks. There's a lot of them. There's Jumia, which is the African Amazon company. Cisco. Cisco is might have pretty good earnings considering their business of delivering all kinds of things that people need when they're in quarantine. They probably had a good season. So you can go through it. And also every morning when you, before the market opens, you can scan pre-market for stocks gapping 3% and more. And then what's important is to check the volume, because basically the volume means there's interest, and we know that interest is what we want, right? Otherwise, it's not the momentum. And then you can check those daily charts for key levels. And so you go here, oops, you go here to daily chart and just mark the main resistance and the main support levels. So I have a function that's called price level, and I would say, okay, this is a really nice support here, and it also ticked on it here and here. Yeah, that's somewhere here. You know, it's not, doesn't have to be exact. It's not an exact science. So just use a common sense and see if the stock tipped a few times on the same level, you can assume that there is some kind of support or resistance. So like here, this was to the upside and down. Yeah, probably somewhere, we can say somewhere here, where it would be resistance. And you just go this way and mark your support and resistance lines. And if your charts are set up properly, then it should copy into your intraday. So if I do it here, you see this level is pretty accurate. You can always take it and adjust it. You say, okay, actually I see here that maybe the support level should be on this level here, just slightly lower. So you can always fine tune those levels. And then once you have that, you will be watching for is the stocks that are gapping over those support level or resistance levels, because when they gap up or over, then there will be more interest. And what you want to then watch for is the pullback to that resistance that they just broke, and then you can buy it at that level, because a lot of times you see they will pull back. So for example, for ATVI, I have it for tomorrow watch because it broke this resistance level. It came out pretty strongly. Now it's pulling back. It actually bounced on Friday from the moving average, and I will be watching tomorrow for this stock to try to break this low and then show some kind of strength and go over that resistance, previous resistance levels, hold, so build, and I'm talking build on the intraday chart, and then reversal. So then continuation actually of the trend. Chewy is another one that I'm looking for. You see, there was a beautiful breakout of the, so this is basically a range breakout or a flat top break, although in this case, it's not really flat top, because flat top breakup would be when you have stock bouncing against the resistance, but then making lower, higher lows. So this one was more of a base breakout and then moved up. Now it's pulling back on quite a low volume comparing to the breakout volume. So there is a little gap. So maybe, you know, if it opens lower tomorrow and then on the intraday chart will reverse, or at some point will change the trend. So it doesn't have to be very explosive reversal. It could be just a trend change after basing, and then you have the base breakout and then continue to the upside. So I have ATVI, Chewy, that's for tomorrow. I have CODX, that's stock related to the vaccine. One important thing when you make your earnings list is to know the float. So if you don't know the stock or you have never traded it, check the float, because especially with the earnings play, the smaller the float, the more volatile the stock will be. And like for the earnings play, you do want lower float. Let's say maximum 100 million shares should be the float, because if you have a float over, let's say 500 million float, those tend to retest the breakout. The smaller the float, like below 100 million, very rarely they retest the breakout. So you see, this is what I'm talking about. When they break out, and then they just keep going. When they have the smaller float or bigger float, then they tend to retest. So this is what I would be watching this for a bounce. So you see it held the same level 2 days straight, and the volume is diminishing. We'll be looking if there is a way to bounce off this level and go back up. Then I have deck, which looks pretty nice. It had a really nice move up, was consolidating, made a new high, now pulled back to the moving average to actually that support level. So that is something that, again, I'll be watching. See here over this level here. Disney had a nice breakaway gap on the daily chart. And because of the earnings, and you see they have a gap here. So it will be interesting to see. I think it will try at least to go to this level here, and then it might reject, or once it goes over it, it might to close the gap. Mind you, there is a resistance level here. You see multiple. So this could be a nice move. And if it does not go over the Friday's high, it might pull back. So it's worth watching. It's still, a few dollars, might be worth watching. ENPH, also really nice move up on earnings, now consolidating, watching for continuation, only taking the trade over the highs, over the last highs of 76, 75 would be the trigger. If you look on the intraday, you see it had a big pullback on Friday. This is the high. So it tried to do it already on Friday, and then it pulled back. Preferably, let me look at the 5 minutes. Okay. So it had a pretty big move, but then totally rejected it. It did not make a lower low, which is good. It got very close to it. So it will be interesting to see how it opens. If it gaps up and then maybe pull back, red to green move, that's another setup. And then hopefully continuation, but the actual breakout would be over the 76, 75. So if you have an alert somewhere around maybe over the highs from Friday of like $1 earlier, then it's really that. So make an alert over the high from Friday, then watch what happens. If it builds, and for example, you see a consolidation or you see a flag forming, then on the rising volume, there is a chance that it might get through it, but the entry is not earlier than over the high. So that's basically how you put those two together, the daily and intraday chart. Another thing that I have here that's interesting is FSOY, looking for a bounce of the same support. It's not ideal, but if it bounces, it would have a nice, nice potential. So definitely something interesting to look at. If it is not a typical breakout. So if it's not your strategy, stay away. This is a breakout on Groupon, beautiful. So basically here on Groupon, after a move like this, there is nothing, right? So you can either wait for the consolidation, or there is another setup that's called red to green. So ideally, this stock would open and go red. So basically, go under the price that it closed, pull back to some kind of support level, maybe this level. I would start watching it. 23.40. And if there are enough buyers there, it can happen very fast. The red to green move, or it might open and just drip down to, to support level, and then start consolidating and creating a pattern, and then might continue the move. So I have a few more here: Halo, HD, Lulu, Netflix. Another one that I really like is Target. Target, they have earnings on the 19th, so still some time to go. You see, they had a really beautiful breakout here out of that consolidation, and they made a new high and a very strong Friday. So I would definitely be looking for some kind of pullback from on Monday, and then continuation and making a new high. That would be my ideal scenario. Whether it's going to do it, that depends on how it's going to set up tomorrow. And Walmart is also pretty ready to go, I would say. It has earnings on the 18th as well. It is creating a beautiful flag here after very strong move, nice consolidation on the break of the flag. Don't forget, there is a moving average here, so there is a resistance level. So if it breaks the flag, it has to go over the resistance. So ideally, you wouldn't take it earlier than over the resistance. But those decisions, so based on the daily chart, you just make your decisions like approximately the levels you're watching, and then the entry decisions you make on your intraday chart. Well, I hope this is that's helpful. One thing to remember for next week, that not every gapping stock is a breakout. So if you're scanning pre-market and you see stocks that are gapping up, opening higher than the last closing price, it's not necessarily a breakout. It's for breakouts, we are looking for the stocks that had breakouts before. If this is like a first breakout of the stock, usually for the breakouts, you have to have a history of breakouts, because that's also what other traders are looking at. So for the watch list, there are different ways to do it. You can do it in your trading platform. As I mentioned, you can put alert. You can also make a watch list like I have, different tiers, and then scan it. Also, like the ones that I have on coiling here, feel free to make a screenshot. This is something that I will be watching tomorrow and see if there is, any changes like ADSK. It's also consolidating, but the fact that it closed under the moving average on Friday, it didn't really show that much strength. So it would have to move over that level from Friday in order for me to be, again, interested. That's why it's on coiling, not directly ready yet. This one had a big move, just waiting for more consolidation, because we don't want to get into it and then have it go down. Lulu, beautiful. NVIDIA had a big move. Now it's ready for consolidation, maybe some pullback. Okta was a nice trading up, but pullback. It was timed for it to pull back a little bit. So this might be announced bounce play. And SQ, fantastic breakout here, and then it gapped up even more. Beautiful. That was a beautiful trade. Now just waiting to see what the stock is going to do. Right now, I don't see anything that I would say, yeah, this is a setup or something I would want to trade, unless it would go over the high, which would be very bullish. So you need a ticker on your watch list. Check your float. So these are basically, you can, like, if you have a piece of paper, make sure you have the ticker you're trading, the float. You can also put the industry, so if the industry is strong. There is and there's like per week there are different industries that are green or red, And you can also see it on marketwatch.com. And then what is the setup pattern you're looking for? Is it a flag? Is it a range breakout? Is it a base breakout? What is it that you're looking for? What's the breakout level? So your trigger, and what is your alert? So from when do you put the alert to start watching it? So once the alert goes off, you look at your list and you say, oh, okay, this is my breakout level. So this is where I have to watch. If you like to see, I have the watch list that I've been trading this year. These are slightly different stocks that what you see here. I do look at them on a regular basis. If you would like to have it, just comment below, go to, and I will send it to you. And that was it for today, actually. So let me know if you have any questions. You can always email me, and I'll be more than happy to answer. Yes, having watch list is definitely something that every single trader should have. And, you know, it's good to have your own, because if you are trying to, you can always get ideas from others, but it is good that you make your own watch list so that you understand the levels you're looking at and why you're even looking at them, because that's, you know, you'll be much more confident trading those positions than if you just pick a ticker and just trying to get in and out of the stock. If there are no questions, then I'm gonna close up for today. Thank you everyone for joining, and good luck trading tomorrow and the coming week. If you have any questions, please feel free to let me know, and I will get back to you as soon as I can. Enjoy the rest of your Sunday. Thank you. Bye. Speak soon.